Good morning, everybody, and welcome to the June 14th issue of the Tucson Mortgage Weekly. I thought I would do a little background check today. It is Flag Day, and while it's not a somber holiday, what it is a celebration of the adoption of the U.S. flag back in 1777, so it's the 233rd anniversary of the U.S. flag. Fly yours high if you have it and be proud. Okay, what's going on? Let's see, last week there was a lot of debate among Fed members about whether or not it's time to start raising the federal funds rate. If you're not sure what that is, it actually is what banks charge each other to borrow money overnight. Right now it's in the 0.25% area, but there are now two members talking about raising it to a full 1%, and that would clearly raise interest rates, and more importantly, it would cut off a lot of the credit that's been available. So right now, it's a double-edged sword as to whether they proceed, but the fact that they're talking about it seriously means we have to pay attention to it. What's going on today right now? Well, the European economies are showing a little bit of stability as compared to where they were a week or two ago. Personally, I think it's a short, just a knee-jerk reaction. Clearly, based on the numbers, it's not good in Europe, and I don't see it getting better in the immediate future. But so far, it's causing stocks to improve a bit, and therefore we're seeing pressure on rates. They may be up a little, but realistically, take a look at the information. They're still phenomenal compared to where they were even a year ago. What's coming out this week? On Wednesday, the PPI, and Thursday, the CPI, the Consumer and Producer Price Index report's coming out, which is going to start giving the Feds information that they need as far as making decisions about raising rates. So right now, that's really what's blowing around. And closer to home, you may have been reading in some of the papers, especially the business sections last night and over the weekend, that Fannie Mae has introduced a new initiative that any loans that they buy effective July 1st, which means any loans that we're originating pretty much June 1st and beyond, they're requiring us to pull another credit report right before we fund the loan, with the concept being is that if are there any new credit inquiries, if there's any new debt at all, and we don't know whether there's a 1% variation or a dollar variation, but if there's any change in the amount of credit and that could affect the approval, we have to literally re-underwrite the loan. So get my teeth back in here. We have to re-underwrite the loan. Now that's really problematic, because what it entails now is that we have to tell our clients on the front end that they have to literally take their credit cards and not charge anything. Let's say they're going on a vacation, they're spending $1,000, they come back, we run a report, and MasterCard has another $1,000 on it. That could actually affect the approval on the loan, especially if they were tight. So how do you tell people to pretty much put their entire financial life on hold for the 2, 3, 4, 5, 6 weeks it might take, depending on the situation, to close their loan? But that's what we're looking at, boys and girls. So tell your clients and be aware of yourself that from the minute you apply for a loan and get credit pulled, that is the snapshot, and we cannot get any worse than that. So ultimately, that's huge, huge change. It's going to be a headache, and it's going to delay closings. You can take that to the bank. Anyway, if you have any questions, give us a call. Todd Abelson, Sun Street Mortgage. I wish you a great week, and remember, happy Flag Day, and check out the mortgage blog, TucsonMortgageBlog.com. Bye-bye.